Anyway, let's go on to this. What's the top 5 things to watch next week? So, Kev, I think, all joking aside, there's one thing that has to be number 5. With the Canadian bank holiday on Monday, everyone in the world has to watch for the low liquidity conditions, because both me and you are going to be up at the cottage, and when we stop trading, global trade activity just narrows, and the volatility is just crazy.
It's when Canadians head up to the cottage, it just becomes an illiquid market that the Americans are like, what are we going to do? Like, we can't make markets. We need the Canadian liquidity. And they don't know what to do. So, you know what's funny is your partner there on the other show, Eric, I was talking to him briefly, and he said something about, I joked about the May 2-4 long weekend. And he said to me, May 2-4, I thought I spoke Canadian. I don't know what that is. So, like everyone who doesn't know, the May 2-4 is not like, that's usually the amount of beers that Patrick will drink on a kind of the
On
weekend.
a weekend.
Yeah,
No, that's actually on each day of the weekend.
that's right. But the May long weekend for Canada is actually around the 24th of May. So often we call it the May 2-4 long weekend. And what's really interesting is how Canadians have our long weekend ahead of the Americans. And given that we're farther north and that it's colder up here, you think we would go the other way. You think we'd be smart enough to go, hey, they're having their long weekend, whatever. Let's make it a couple weeks later. But no, the moment the ice breaks, we're like, okay, time to head to the cottage and go swimming.
Oh, it's true. The polar bears swim at the cottage on May 2-4 is like a strong Canadian tradition.
You got it. Okay, let's go on to number 4.
Anyway, let's now we got to get serious here, Cap. Okay, number 4. I wanted to just watch what happens. So just saying it on the Canadian theme, Canada's largest bank by market capitalization, Royal Bank, has its earnings coming out here on the 23rd of May next week. And it's interesting because there's been a lot of wishy-washy price action on Canadian banks, but Royal Bank's been behaving much better than most. It had a strong recovery back the other way. This is the Royal Bank on the TSX, but obviously trades on New York on the same symbol. And it's been behaving pretty well. But we've seen a number of people like Steve Eisman coming out and really suggesting that these Canadian banks are going to start running into trouble. And this makes me want to pay attention to these earnings to start seeing whether the cracks in the dam are starting to manifest or whether they're still showing these pristine numbers. And I'm really curious. What's your take?
Well, first of all, as a former RBC guy, although that lion seems to follow me around everywhere and I see the bloody lion wherever I go, they are, hats off to them. It's the best run bank. And I'll say that. And without a doubt, to me, if there's going to be problems in the Canadian banking sector, it's not going to be in Royal Bank. So although we got it here because is it the first one that announces?
Yeah, I think it's the first one. I didn't check all of them, but it is one of the first ones.
Right. So it's the best run of all the banks. We used to joke about CIBC, and obviously this is a long time ago, but we used to call it the bank that was most likely to walk into a sharp stick. It'll be interesting. I think if we're going to see any problems in the Canadian banks, it'll actually. I would bet it's going to be in a national bank or a Laurentian. And I think I've seen other people say that they're the ones that we're going to see the deterioration from the mortgages. And Patrick, I am somewhat bearish on Canadian real estate. I think that the tide has definitely turned. I think Vancouver was at the forefront of it. We're going to have trouble. We're going to struggle. And I continue to say that the Canadian economy versus U.S. economy, you have to choose the U.S. hands down. Canada is going to, this next year or two we're going to be lucky if we can just, skate through this without a real problem.
Well, I am not going to agree with you just because I have a stake in that, and I don't want to curse us, because when me and you both agree on this show, it never goes well. Okay. And so I'm gonna reserve. I'm just not gonna say anything. I'm just gonna pretend nothing's happened. But anyway, but look at Bank of Nova Scotia in this is actually on NYSE. Hold on, let me look at it on the Canadian side. Point is, there are Canadian banks that have been sucking wind far worse. Right, like this has been in a downtrend. This is so the moment the emerging markets topped, so did Bank of Nova Scotia. Like it's been on a downtrend basically for a year and a half, almost. It's almost going 2 years now. Yeah. Right, and it just can't seem to make a higher high at any point. And so Royal Bank's held up. And anyway, but the point is that if Royal Bank has a crack in the dam, then the other banks are going to all be in trouble.
Oh, I agree with you there. If all of a sudden Royal misses somehow, then watch out because it'll be the start of the end.
Okay, number 3, European PMIs. Right, so France, Germany, a whole array of them are coming out now. We had recently a number of strategists come out who are looking for European numbers to start to trough. You're in that camp, aren't you?
Well, so first of all, my mea culpa. I thought for the longest time that Europe offered good value. I thought that one of these days all of the monetary stimulus would ignite. In learning what I've learned recently, and I'm gonna admit to using some of my MMT kind of knowledge about the way that the kind of economy works. I've become a lot less optimistic that that's ever going to happen until the European governments start spending. So right. I used to think that you could kickstart an economy with enough monetary stimulus. I've abandoned that. And I think until we see a situation where the Germans or the Brussels in general allows countries like Italy and all these other, kind of other countries that are struggling to run higher deficits, I just don't see this being anything more than a short-term bounce. And listen, yeah. we're going to get a short-term bounce. We're down and out. It's ugly. It's there's no doubt that Europe is going to it's not the end of the world, but to think that it's going to lead out of this is just I don't see it.
I don't know about lead, but I think that what I've heard is that they're looking for a trough, not a lead and a big recovery, but the idea that the weakness that we've been seeing that it's going to slow. But when you look at stocks like Deutsche Bank. That have more or less like let me just see here. Let me pull up Deutsche Bank on a chart here. Like it's on a U.S. dollar basis. It's broken to a fresh new low.
Yeah, it's ugly. Like, and how about the German?
Who is that guy that wrote?
I don't know. That guy's
there's
an
a guy that I know. There's a guy that wrote this blog talking about that they're a buyer, and then there was this other guy that he's friends with that told him that he was selling to him. Do you know who we're talking about?
I don't know. No clue. No clue. No, touche. Well done, Patrick. I blew that. I really did. That was my pre-time when I thought that the monetary stimulus would actually go. And I have abandoned that. So,
all right.
One thing you should
first of all, the merger of Deutsche Bank with Commerce or whatever it was, it fell through. Do you think that there's a systemic risk to Deutsche Bank?
No, I don't think there's a systemic risk. I don't know why you put two pieces of shit together and you have a tasty shit sandwich. That's not going to happen. The reality is that they need to get their economy going and they need to spend. They need to allow the government to spend. And to think that you can fix it with austerity and more monetary stimulus is absurd. Look at the German 10-year. Pull it up, Patrick. Pull it up. Sure. That's telling you everything you need to know. German 10-year is minus 10 basis points.
Yeah, it's going to take me a second. I just got to find it.
It's just ridiculous. And to think that you're going to solve it by doing more monetary stimulus is absurd. And to think
minus 10, unfucking believable.
Yeah, and to think I saw them talking about minus 300 was what they were going to need on monetary stimulus to get their economy going. Do they not understand that it doesn't, negative rates don't work? It's just like
Well,
like crossing the streams in Ghostbusters. It just like shit happens that you don't know. Like it's just you don't want to do it. You don't
Yeah.
want to go to negative rates, and they just don't seem to get it, and they just continue down this road of doing more and more monetary stimulus and more fiscal austerity. And the more they do that, the more they're going to suck wind, and that's all I can say to that. And one day when that attitude changes. And when you get somebody like Trump that gets in there and says, no, I'm going to actually do fiscal stimulus, then the boon is going to be the short of a lifetime. Lifetime.
God.
It will. It will.
Just like the JGBs,
No,
buddy.
no.
Just like the JGBs.
No, but
you and the Widowmaker.
But the JGBs, they still haven't done it either. And I'm telling you what I'm waiting for is for them to go and to take a really hard fiscal stimulus stance. And listen, Patrick, it might not happen. And if it doesn't happen,
I'll tell you what. When it does
let me
happen,
just finish. One second. It might not happen, and I'm not trying to predict it, saying I am short those things, because I am not short those things, because I understand that if they don't do those things, we aren't going to get the move in those fixed income instruments. But if it does happen, and that's all I'm saying, be ready for it, because it will be the trade of a lifetime.
And, you'll be able to trade it from your retirement home when your daughter's changing your diapers, because that's how long it's going to frickin' take for you.
Patrick, you know what? I have huddle puddles all the time. That could happen like next week. Okay, let's go on to number 2.
Number 2, breakout or fake out on the dollar, bond, stock market. Like, I just thought this was really worth talking about, because we're at it. Okay, like, from an intermarket perspective, the likelihood of a U.S. dollar rally to correspond with a drop in yields as bonds break out to fresh new highs, and the stock market breaking to all-time new highs, simultaneously all three happening, it would be like bizarro world. Like, I mean, I'm not saying it's impossible that it can't happen, but from an intermarket perspective, this is not a natural occurrence by any account. And something is not going to work out this way. And so when you're looking at this US dollar, it's like a flagging formation from technical analysis that is itching for a breakout on the upside. And so the dollar's index is rolling up, which is predominantly the euro breaking down. And by the way, listen, I shit on you all the time. Your Aussie CAD trade is a great call, dude.
Oh, thanks, man. Someone timestamp that so we can get the one time when Patrick says something
but
nice.
Listen, no, but look, you know what? The Aussie has broken 70 cents, cleared a cent lower. We're down below 69, and CAD is trapped in its range. Now,
Yeah.
like I still think CAD's going lower, but the Aussie is clearly going lower faster, and this trade talk. And this China thing has actually accelerated exactly what you said. You know what? You don't get very many things right, but you nailed this one. You nailed this one, and I have to give you credit for it.
Well, thank you, Patrick. Very kind of you, bud.
but anyway, so the dollar, is it going to break out? And at the same time, I'm going to use the 10-year just for the sake of that's the most tracked. So the 10-year yield is obviously at the bottom end of its range, about to break, but the reciprocal is the bond itself. So the 10-year bond is itching to break out. And it's right along the highs. Feels like the same almost chart pattern as the dollar in some degree or another. Not completely the same, but it's like the dollar could break out and 10-year bond futures could break out at the same time. At the same time, in your little kumbaya land, the S&P 500 could potentially do the same. And can it happen?
All three at the same time?
I don't think so. But what do you put the over-under odds of this?
I don't think. Well, it's hard. I think that we could get a situation where the dollar and the stock market go up for a while, and I think that bonds will most likely sell off. I personally think that bonds are rallying on the German boon move more than they are on anything else. And also people's belief that Trump is going to bully the Fed into lowering rates, which to me is actually bond negative. I don't understand why, if you were a bond person, you would want the Fed to lower rates. In the long run, a long bond investor's worst nightmare is inflation. The best way to not have inflation is have rates, have a Federal Reserve that is hawkish.
Please
and
go
then-
listen to a
yeah.
Lacey Hunt interview
Oh.
again and just fix your brain.
Okay.
This is anyway. It is not as big of a risk. You know what? Your MMT shit is a much bigger risk to inflation, and that would be a bond trader's
listen,
nightmare.
I
Is where you are right. But this idea of the Fed lowering rates is going to somehow no. Stop it. Stop it.
Anyways, okay, fair enough. We agree to disagree, but
anyway,
I think
we're
going back to 1 second, going back to it, I think that the move in the bond was wrong. I think that it was forced by the German squeeze in the Bund, and I think you're going to find that when things settle out, the dollar's headed higher, stocks are headed higher, bonds headed lower. That's my prediction.
I'm going to say dollar higher, bonds higher, and stock market lower.
Yeah. Okay. Well, that's what makes a market. Meet
Right,
you in the
and,
machine, buddy.
Meet you in the machine. We've met many times in the last couple of weeks. All right. So number one. All right. And number one, FOMC minutes coming out on Wednesday, right?
Yeah. So this is actually a big deal because we get to see what the FOMC was thinking. Now, with a little bit of a caveat that I didn't realize till recently, that they actually have the ability to massage or scrub those minutes. Did you know that?
No.
Yeah, they can choose to not do it. I don't think we get like the word by word one until like.
So like
5
they can
years
scrub
later.
it like Mueller style, where like
Yeah.
the black.
Yeah, I think they can. I think 5 years later you get the word by word one, but for now we just get kind of what they want us to see.
I would never imagine someone within the government and or central banking community feeling that they have to manipulate their words to give people an impression of what they need to hear versus what the truth is. I've never.
Yeah. Yeah, no, you're absolutely right. That would never happen. The government would never do it. That
No.
line about Juncker, he says when it gets serious, that's when you have to lie. That wasn't real.
Classic.
Yeah.
That's classic, dude. That's like, you know what, we should actually have that as the header of the market huddle.
When it gets serious, you have to lie.
We should put that in our logo.
No, I don't think so. I like ours. When it's different this time.
All right. Anyway, but we're watching the FOMC minutes. I think it's going to be fun to watch.